So Bitcoin is developing something different than what we've been discussing, which is nice because now the live streams can finally be something different than me just saying the exact same thing over and over again, right? So it is slightly different. Not too much has changed, but it's a slight difference than what the previous live streams have been rambling on about, right? So most of what we've been saying is still true. We're still at this range high resistance. This is the exact same resistance has been holding us down since middle of May, so almost 3 months now. And so we're just going to anticipate that resistance is going to be resistance, right? Yesterday we managed to close, or I'm sorry, not yesterday, but the prior 2 days prior to yesterday, we managed to close a few daily candles above this range high resistance. That does imply further strength, right? That does imply that this time is different compared to the last 3 times that we tested this range high, right? So you want to see expansion up and away from the range at that point. Once you start to get consistent daily candle closes above the exact same region that has been giving you macro tops for many months now, right? As well as acting as macro tops prior to that, back here, you can clearly tell that this zone is resistance. So, with candle closes above it, with bullish price action trending upwards above it, you would want to see expansion up and away from that region. You want to see that be the start of a bullish reclaim of a major level, and you're just further up and away and off to the races from there, right? So next target should be the 200 daily MA, and then 47K, and then we can move upwards and we reclaim that and we go for 52K. Then there's some nice volume here. There's like a 4 hour supply zone, I would say, at 55K. Then we have our last daily supply at 59K, and we break that, and it's all of a sudden extremely likely that we head up to all-time highs, right? So that's what you want to see. You want to see that start to play out on a much bigger time frame. You want to see the beginnings, the infancy of that sort of move, right? Whatever result that we do end up getting from it, whether it's just 44K and we test our 200 daily moving average, or whether it's the resumption of a new year-long bull market or whatever, right? Whatever narrative that you want to rock with, you want to see that start to play out. And obviously, here today, we did not get that. So now we have to discuss the possibility of a range deviation. If you don't know what a range deviation is, you can go back and watch multiple of the last live streams. I know for sure I covered it in the last live stream, but really quick, we'll go over it here today. A range deviation is once you form a range, you form a norm, right? A normal. The normal thing to do in your range is every single time you see range lows, you're going to bounce and you're going to see mid range and then range highs. And then every time you see range highs, you're going to sell off and you'll see mid range and then range lows, right? So that is your norm within the range. That is how you go about trading a range. That is the mentality that you should sort of have whenever you're looking at any sort of range, whether it be on the daily time frame or the hourly or the 15-minute or whatever, right? That's how ranges tend to play out. So that becomes your norm. Every single time you come down to range lows, you then expect mid range, range highs. That's normal. Then when you see range highs, you come back down, you see mid range and range lows. That's normal. Once you start to expand either below or above the range, now you're not getting your norm anymore. So now you're getting something different than the norm. So typically, you would want to see expansion in that same direction. Theoretically speaking, once you stop getting the norm, right, which is we tap range highs and we should theoretically come back down into mid range and then range lows. Whereas when you stop getting that norm, you break out and expand, you would assume that that means that this has now resolved. We've now made up our minds on the direction on a much higher time frame, on a much bigger scale, and we can start looking for expansion away from the range, whichever way that that breaks, right? So once you fail to do that, that sort of expansion away from the norm, and you instead fall back inside of the range, let me get rid of these squiggles here, but you instead fall back inside the range, now you're trading back within the norm. So now this move up and above the range that was supposed to be expansion is now all of a sudden back into what the norm was. And your norm was your range highs, see mid range, and then range lows, right? So you could very much make the argument that this is a deviation. So that implies a deviation away from the norm, which just means, hey, instead of perfectly tapping range highs and then rejecting and seeing mid range and then range lows, we instead went a little bit above range highs and then fell back down. And this was just a deviation to the norm, but guess what? The norm's still going to play out anyways. So then, deviations, we can say, likely see or imply mid-range and range lows once again, and that the range is just going to keep ranging. So you can truly, honestly make that argument, and it is a persuading argument. You definitely have that on your side. That's how deviations tend to work. That's how you want to think about them. Even if you wanted to say, we had a range back here on Bitcoin where we had our range lows were 50K and our range highs were 59K, and we see range highs, range lows, range highs, and then, we see sort of like this mid range tap and we break out. So we should expand away, and instead we fall back down, right? So now that's a deviation. We fall back down. So now we go down to test our range lows once again. You deviate from your range lows. Once you reclaim the range, you're back inside the norm and you see range highs once again. So then range lows, and then you break down from range lows, and now you're finally expanding. So this is not the cleanest example. This is definitely a much cleaner example. It's just a question as to whether that sort of deviation theory slash idea slash whatever is going to play out here today, or are the bullish arguments still going to hold true? Right? So what are the bullish arguments? The first bullish argument that we can clearly see on this daily time frame is just the simple fact that you're holding this 200 daily EMA as support right here right now. So obviously this is the daily time frame. So you want to see this on a daily basis, just like how this candle tested this 200 daily EMA and then bounced upwards. It looked very scary, looked very ugly, whatever. And instead, we got this nice little bounce from that support level and broke out and above the range, right? So you want to see this hold on a daily basis. So we still have 6 hours left to go before our daily candle closing. So of course, there's always the chance that we do end up closing today's daily candle below this region, and now that bullish argument goes away. But for now, we're still holding it as like this support level. We're still back testing it as support. So that is a bullish argument. Just the simple fact that we are above it and that price has seen a nice little bounce from it intraday. So far, so good, right? That sort of thing. So there's always the chance that that holds and you do end up breaking out and above the range. And now that range deviation idea goes away just as quickly as it came into fruition, right? So that is still a possibility. Do not rule that out. Your 4 hour is where you have additional arguments for strength. Your 4 hour market structure is still forming higher highs and higher lows. So yes, it really is that simple. You are forming higher highs and higher lows. We've been saying this. This should not be a surprise to anybody. Obviously, this was a lower low. Then we form higher high, higher low, higher high, higher low. And we just continue that trend up and up and up, breaking through each and every single resistance on the way up, and just, you know, to the point where our daily just looks like this vertical movement. But then you zoom into this 4 hour and it's a very clean structure. It's obviously higher highs and higher lows. It is sustained buy pressure. It is people willing to step in at higher prices or get back into their Bitcoin or whatever to continue pushing this up. That is the trend. That is the name of the game. You want to anticipate that until that changes. This argument that, hey, we're forming higher highs and higher lows does not go away until it goes away, right? So it goes away once you form a lower low, or once you lock in this higher low, you start to swing, you start to show the strength on the lower time frames once again, and you fail to create a higher high, and instead you create a lower high anywhere below this high, right? So it could be here, right now, this current 4 hour candle. It could be all the way up at 41.5. It doesn't matter. It just needs to be lower than this current high. So we're not expecting that. That's not the probable play in terms of a trend, in terms of our market structure. This is the exact same analysis that we were making all the way back here. Nothing has changed. We're still making, so right here we had consolidation, but eventually we did break down. So this is a lower low. So now we have lower high, lower low, downtrend, and then lower high, lower low, lower high, lower low, lower high, lower low, right? So that trend just continues on and on and on until eventually we meet a zone, we smack our face into a brick wall and then reverse, right? So it doesn't, there is not an argument for a reversal until there's an argument for a reversal. That is the way to sort of think about this in terms of trend and momentum. So we're still logically within the terms of an uptrend. And then when you go and zoom out back to our daily, you see that our 200 daily EMA is right here, right? So it makes sense that this would be a higher low and just simply continuation of the uptrend. So you want to watch out for the anticipated move, the move that is more probable to happen. And if instead we fail to hold that 200 daily EMA, we'll also likely break our 4 hour structure and will likely continue downwards into either 37K, where we have 4 hour demand. That's the zone that held up last time, or will continue plummeting and that weakness just kind of snowballs or continues on or whatever into these 4 hour 200s. And we know the 4 hour 200s, hopefully, this is not news to anybody. Hopefully, I sound like a broken record when I say this, and you already know this by now. The 4 hour 200s have acted as macro bottoms for the entire bull market since that March COVID drop, and they were macro tops for the past 3 months. So you would think bullish retesting them would see some form of a bounce, maybe even the higher low that we're looking for on the daily time frame. Because remember, our daily market structure is not even confirmed bullish as of yet. We've been forming lower highs and lower lows. So this is a downtrending structure. This is very obviously a lower low. And this is all one higher high, right? So an uptrending structure consists of higher highs and higher lows. We still haven't gotten that higher low yet. We're still looking for a higher low. Unfortunately, we're looking for a higher low anywhere higher than this low. So 26% we could drop and still find a higher low on our daily and still technically be bullish trending. So your job is to kind of zoom in to the lower time frames and find the ideal region for us to find a higher low on that daily time frame, right? So I would think that that ideal region would be these 4 hour 200s, wherever they are currently residing on any sort of move downwards that we may possibly get if the 4 hour structure breaks, if the 200 daily EMA gives out, and also if our hourly time frame gives out, right? So along with the 200 daily EMA acting as support, we also have our hourly 200 MAs acting as support as well. And we talk about these hourly 200s very frequently. Very often we see them used as um, a nice like local bottom, local top indicator whenever we're strongly trending. So the fact that we're testing them as support and holding is definitely another bullish argument, right? This was the only real piece of price action where our hourly 200s didn't do much for us in terms of trend and momentum and whatever. And if you do recall, then we discussed how they are going sideways. We called that, I want to say, somewhere about here, or we start saying, hey, they're going sideways. They're sort of acting as like a mean. And if we start to break down or break out, then they'll likely start giving us some form of trend. And what do you know? We start to expand away from these hourly 200s. Now they're sloping. So then we say, all right, if we come back into them, they're probably going to give us a local top. And they do. And then 4 hour structure, lower highs, lower lows, local top once again, right? So then smack our face into this brick wall of support and break that 4 hour structure bullish. So look at that. We're now back testing these hourly 200s of support and we find strength along them. We continue the new trend. And so that exact same argument is true here today. We're probably going to find support along these hourly 200s. That's just something logical to do. And we have that daily 200 EMA as confluence, and we have just the simple fact that our 4 hour structure, our 4 hour market structure, our 4 hour trend is bullish and implies that higher lows and higher highs are expected. So this is a logical region to find a higher low and just simply continue uptrending. If we break down, that argument goes away, right? So now we have, if we lose this region, we've now lost our 200 daily EMA. We've now lost our hourly 200 MAs. We don't really have much stopping us from breaking our 4 hour structure at that point. So we probably see this 37K demand zone tapped. And then we snowball that, and we domino effect that analysis down further and further and further until eventually we either find our daily higher low, right? And we start seeing the strength back on the low time frames again if this doesn't bounce from here, and instead we cascade lower, and we start looking for the strength on the lower time frames to say, okay, that's probably our higher low on the daily. Or if that never comes, then we're just gonna see price at these range lows once again, right? So this is how you don't really need to form any sort of theory or take a guess, a shot in the dark as to what's going to happen next for price action. You don't need to be convinced on a range deviation, breakdown, and we're going to see range lows again. Or you don't need to be convinced that we're going to go up into 47K once again. You can take things level by level, time frame by time frame, one day at a time, and assess the probabilities as they come, right? With every tick that gets printed on this chart, we're given new information as to what's likely to happen coming next, and we'll assess it day by day and we'll take it step by step, right? So this is how I am personally approaching the Bitcoin chart. This is my mentality while I'm approaching it. I'm expecting up. I'm simply just expecting the trend to remain the trend, which is the exact same thing that we did for all of this back here, which is the exact same thing that we did for all of these 3 months, right? And I'm just going to continue expecting the trend to be the trend on whatever time frame and assess things as they come. And if that doesn't play out, if the less probable outcome, right? If the less probable outcome doesn't play out, we adjust and we acknowledge that adjustment and we take our, loss on the chin or whatever, and we adjust again and we adjust further. And now we reassess probabilities and we adjust again, right? You saw this play out perfectly and beautifully on July 21st was when we first said, that first sign of strength, which is something different than this trend. So we reassessed the probabilities and we said, okay, this is likely, right? This is probable from this move. And then we get there and then we say, oh shit, This has now changed the probabilities once again. So now we can say this is likely. All right, we get there. Now we back test it. Okay, we're reassessing the trend once again. We now are showing a bunch of strength. So we adjust to the mentality, much different than we had for the past few weeks, as well as the past 3 months or so. So you've seen it play out time and time again. You've seen it as of recently. If it does break down, we will just simply do the exact same thing that we've been doing. In the meantime, you should expect the probable outcome, or what is, I would think, the price the chart is telling me or implying is the probable outcome. That's what I would think. If it doesn't happen, we adjust. So this is how I'm approaching Bitcoin. Any questions on that before we move on? All right. Don't think so. So, like I said, not really too much of a different analysis than what we've been saying. Right. Also, take a look at these 15-minute 200s. They did show us that first sign of weakness, as we said. They were local bottoms for the entire move up, right, consistently. So we broke down from them. And then title of the market update, what, 2 days ago, 3 days ago, was first sign of weakness. And that same exact day we broke out, we reclaimed it, and we talked about it later in that live stream. And we said our invalidation was, hey, if we reclaim this, we probably keep going, right? We're still continuing that 4-hour trend that we're expecting, and we did just that. And so here again, once or today, we broke down from the 15-minute 200s. We used them as resistance. We break down further. Now we're trying to find our higher low on the 4-hour. We either find it and reclaim these 15-minute 200s, and that should be the sort of signature that says, or that tells you, oh shit, we found our higher low on the bot or on the 4-hour, right? We're probably going to continue that trend of higher highs and higher lows and continue breaking out and continue maybe expanding up and away from the range into our 200 daily MA or our 47K daily supply or whatever. And if that never happens, then we'll probably lose the supports and break down from that structure. And now that's no longer the thing to look out for, right? So that's how I'm approaching this chart basically on every single time frame. Just, you know, taking it down every single one. One time frame can give you some insight into the next one. All right, so let's go ahead. Let's move on to ETH for the first time in a long time, or the first few times in a long time. I'm actually very excited to talk about ETH hence why it was mentioned in today's market updates. If you've noticed, which I'm sure a lot of you have, those market updates have kind of just been Bitcoin centric. There really hasn't been much else to talk about. Everything else has, for the most part, been underperforming Bitcoin, and that just changed. Yes, I know this is obviously very, very bullish and very exciting and whatever. That's a very strong balance. You can't just disregard that. But that hasn't even really outperformed Bitcoin all that much. I don't think at all, really, until up until recently. So when we do look at ETHUSD, the past few days are finally showing some extreme signs of strength where we're now threatening to break up and away out of this cluster of volume. So if you don't know what I'm talking about, I'm not going to go over it again just because I'm sure a lot of you guys are sick and tired of me. Uh, but basically, we're trying to assess this as each level gets broken on a lower time frame and say, okay, we know that there's a cluster of volume, a cluster of potential supply anywhere and everywhere in this 2100 to 2750, 2800 region, right? So as one level gets broken, it starts to look like we're going to fill out the rest of that cluster towards the upside. And so I'm kind of splitting this cluster into quadrants, and that's how it makes sense in my head. But we have to keep in mind that things don't have to be too logical when you have volume like this and when you've been trading in the exact same range or region for the past 3 months or so. Things get over exaggerated. And as we've discussed, rather than pivot level, pivot level, pivot level, you now have people are comfortable and willing to buy or sell anywhere and everywhere in this region. At any given price, they are comfortable and willing to sell, right? So we want to kind of take things level by level. Once we start to reclaim this level, it starts to feel like, all right, we're going to fill out the top side of this cluster. So like this region, right? On our lower time frame, you can see this 4-hour supply zone. So now it looks like we're going to fill out the top side of this cluster, maybe this region, right? And if we break out and above that cluster, what is really stopping us from heading to the next one? That's the whole theory behind supply and demand when it comes to drawing gray boxes on a chart, right? Drawing resistance levels, drawing support levels. We're looking for areas where volume was traded, and it gave us like this sort of pivot where people were active and frequently trading at a given price or at a certain region. And it's sort of assuming that they're going to continue being comfortable trading at that region moving forward, whether it's resistance again or whether it's support now, right? Whether we're back testing something as support and they've gotten comfortable and used to selling that price, or whether they've gotten comfortable and used to selling that price and they're just going to keep selling it over and over again because that's what they're used to, right? So that's the whole theory behind the supply and demand. So when I'm thinking about this and when I draw out the actual physical data that we've seen, the statistics behind this, where is the volume being traded? There's not really much of an argument for why we wouldn't continue breaking out up into like this 3200 region once this entire cluster gets cleared. What is really stopping you? People are not willing and comfortable to step in anywhere in this region. As you can see, when we did break through this region, we kind of just like waterfall candle or inverse waterfalled upwards, right? We melted upwards very quickly, very rapidly. Not many people got their chance to trade in this like 3200 and to like 2900 ish region. Not many people got to, look at the chart intraday, buy or sell. Same exact thing for when we came down. There wasn't much standing in our way once we broke below this 3200 region. People are not comfortable or willing to step in and be a buyer at somewhere where they're not used to. So this waterfalled down until we could find an area where people were used to and willing to be a buyer, right? So we come down into this pivot level. So that's the whole theory. So this current price action looks very bullish to me, and it will only cascade higher, and you will only feel more and more FOMO if this keeps going, because price action doesn't have to be logical, as we just assessed and as we've been saying. So where you get regions where anyone and everyone is willing to be a buyer or a seller, you have to account for the fact that maybe everyone is willing to be a buyer, and maybe we get this just extreme illogical move upwards, or what may seem illogical, but really it is people being comfortable and willing to buy at any of these given prices. So once we break out and away from that, what's really stopping us? So this can extend much, much higher than what you will remain solvent or comfortable with. Do not rule that out, right? This is very, very exciting. It's very bullish price action, and it's very optimistic as well. And the reason why I'm coming in here and being so optimistic is because guess what? Probabilities are on my side. They are in my favor. I am not likely to be wrong on this because the trend tells me, hey, you're not likely to be wrong. Until it does tell me, hey, you are likely to be wrong, until something changes on the chart physically, then I can come in and say, hey guys, I was wrong, right? And I shouldn't have been expecting 3,200. But until that happens, I'm going to expect 3,200. Or at least I'm going to expect the rest of that cluster of volume to get filled out somewhere near these highs, right? 2,800-ish region. Right? At the very least, we keep going, great. As things progress, as one resistance folds and gives way, then it only increases the probability for the next to get tapped, right? So that's the way that I'm thinking about this: a cascade, a snowball, domino effect, right? One knocks over and it increases the probability for the next to get knocked over. All right, so why I'm saying that is because, of course, the 4-hour 200s, right? That's the big one. That's the one worth talking about. But that truly is, it's not really affecting current price action. It's being affected by current price action. But this move tends to see week long to multi month long uptrends or downtrends. And we've seen that. Remember, that stupid analysis, the hey, we are still above the 4-hour 200s, was my bullish argument for the entire bull market. I was the one screaming, hey guys, bears are dumb, price discovery. I'm looking for higher until we lose the 4-hour 200s, and then bears are no longer dumb. That simplistic mentality is what had me bullish on ETH from this move here in October of 2020 all the way up into 4,400. Right. And I'm looking for take profits along the way. Like ultra optimistic take profits that I was screaming about back in December or whatever. And you guys think I'm absolutely crazy. And then they get hit at 3,600. Remember, that was that, I believe it was either 2.618 or 3.618. I can't really remember. Fibonacci reach or extension, right? So that move led to a multi-month bull market. The breakdown below the 4-hour 200s saw a month long, or sorry, no, 2-week long downtrend, where this was a 20% move over the course of 2 weeks. And then we reclaim them and we see a 20% move over the course of 3 weeks. And we break down from them. This was really the only deviation to that idea. Still a 10% move in itself, and we're not going from the high. I'm giving you the benefit of the doubt. You waited until the exact moment that we broke below these 4-hour 200s. That's 10%. We reclaimed them. We see another multi month sort of expansion away. We lose them. We see 3-month long expansion down, negative 45%. So when I'm talking and looking at these 4-hour 200s, I'm not just discussing, hey, these are sloped upwards. This means that we have to go to 3,200 tomorrow. That is not the argument. The argument is, hey, probabilities have heavily shifted towards the Bulls' favor. Up is the trend for maybe the next few weeks. And we were saying this on July 24th. So maybe only a week or two left, or maybe the start of a multi-month long bull market, right? Or maybe the start of a year-long bull market, or whatever sort of bullish narrative that you want to play or talk about. It is now significantly more probable here when this momentum is doing this, as opposed to when it's doing this. And that is the truth, right? That is the most simplistic that I could ever uh, most simplistic analysis that I could ever possibly give you, right? So that is the higher time frame outlook. Now the current trend also agrees with the higher time frame outlook. So now you have any and every single time frame is confluently bullish and telling you uptrend. So really, does it make sense to want to be a seller or a shorter or a person trying to call a top? No, it does not. This is the exact same argument I was giving you inverse for all of this price action. Don't look to be a bottom caller. Expect lower. Expect hey, I'm going to place bids at 1950 and they're going to get hit. Hey, I'm going to place bids at 1740 and they're going to get hit. And instead, if we show the strength, adjust. If your bids never get hit, adjust. Probabilities have shifted. If they do get hit, oh my God, the trend just continued being the trend. There's no shock there. It's the exact same thing here today. Your 4-hour structure is continuously finding higher highs and higher lows. You are breaking each and every single resistance level, reclaiming it, pushing higher, right? Higher highs, higher lows. Break this resistance level, push higher. Break this resistance level, push higher. Break this resistance level, push higher. Over and over and over again. So, my theory is, what tells you that this is going to be a top that didn't tell you that this would have been a top, or this would have been a top, or this would have been a top? What's the difference? And the way I see it, there is no difference yet. If it does prove, hey, this time's different, all right, we adjust. We come back, we take the loss on the chin, we say, all right, we were wrong. This time truly was different. We can now look for a back test of this 2380 to 2410-ish region where we have 4-hour demand. If that doesn't hold, then we'll look for the 4-hour 200s, right? We know that those 4-hour 200s love to get respected. So you take things level by level, but in the meantime, you want to put yourself in agreement with whatever the trend, whatever the probabilities are telling you. And right now, they're telling you up, right? So that is the outlook for ETH. And yes, it is very, very bullish. You can see just how bullish this price action is. We're not even finding local bottoms along these hourly 200s. We're finding local bottoms along the 15-minute 200s because that's how strong this is, right? So as of recent, this is why I'm saying this chart really starts to excite me here, is because this is showing more strength than Bitcoin. This is obviously the resistance level, and we sort of match this up and compare it to the Bitcoin chart. This is that range high resistance for Bitcoin. And just doing a quick flip back into Bitcoin, you can see the drastic difference in how they reacted to their like respective resistances. Right? So ETH BTC is, of course, bouncing. So we can go take a look at that as well. So now we have ETH BTC. This was a downtrend. This was lower highs, lower lows, right? And we've just broken that on the daily. This is a higher high. Really odd, really illogical sort of price action for ETH BTC. Doesn't make too much sense. You can definitely justify it on lower time frames, but this higher time frame chart, I don't think is really too worth talking about. For the most part, it's just you want to buy this weekly demand zone, you want to sell this weekly supply zone. Right? So, excuse me. There's really not too much else to talk about other than that daily break in our market structure. And then we can zoom in and make more sense of this chart from there. All right. So range deviations. This was a perfect example, and we've been discussing this range. It really, really, really does not get much cleaner than this. This is your range high. This is range low. So first low, you want to see generally, ideally, textbook, everything is butterflies and dandelions. Your first low is your range low. So we actually got that. Your first high after that first low is your range high. And we got that too. So then we see almost a move back to our range lows, whatever. We got mid range, slightly below mid range, didn't see range lows, whatever. Range highs, perfectly rejected. Mid range, back test mid range, range lows. range lows, mid-range, backtest mid-range, range highs. Deviation, so remember, this is the deviation. This is you expand up and away from the range. You now anticipate the move higher. Sorry, I'm going to try and clean this up. You now anticipate the move higher. We are breaking up and out of the range. Not only are we breaking up, but we're trending up. We have higher highs and higher lows. It is logical to assume that this is the next target. If instead you lose the trend, you lose your market structure, you lose the 4-hour 200 MAs that you're also just coincidentally trading along, you trade back inside your range, you crack down below these range highs again, you want to see the deviation come back down to mid range and then range lows, right? That's how deviations work. So then we tap range lows, see a little bit of a bounce, mid-range, come back down to range lows again. Now we're breaking down. So again, it makes sense. It is logical to assume breakdown and expansion away from the range, just like we assumed up here expansion up and away from the range. If we're wrong, we know exactly when we are wrong. So then we reclaim the range. Now this is a deviation below the range. Sees mid-range, range lows, mid-range, range highs. Now we get the real expansion. This doesn't get much prettier. If you are looking to learn how to trade ranges on, your spare time, if you have nothing better to do than stare at charts all day and look for ranges to trade to try and make money in this market, you would dream about a range that looks like this. You really would. It does not get much cleaner than that. So the range played out beautifully. We're now seeing expansion up and away from the range. That expansion from this 4-hour range has led to a break in the daily market structure. Everything is confluently saying up, right? Up is the trend. We're breaking key levels. We're trending upwards, higher highs, higher lows on every single time frame. So it is logical to assume that the next destination for price to come to is this higher supply zone up at 0.07 sats, right? If we come back down, that's fine. We're still well within the terms of the uptrend because guess what? Our market structure says higher low above here, right? All the way down at 0.058. That just tells you you need a higher low somewhere higher than anywhere in this region, somewhere higher than this low, right? So that can be anywhere in this region from current price. So ideal place to do that at is probably these 4-hour 200s with the range highs. Maybe it's this 4-hour supply zone getting back tested as support, right? Wherever it may be. You just want to look for continuation. You want to look for the trend to remain the trend, and you want to scale that up into each time frame as things progress. So then your hourly, same exact thing, higher highs, higher lows. Your hourly chart, I wouldn't even really call this a higher high, higher low, right? I would really say this is higher high, higher low, and we just kind of continue up and away from there. So this is your invalidation on your hourly. So if you are looking for continuation plays, you probably can say any move down here, right? If we just break down, bullish retest of what was previously resistance and support many times. So we're bullish retesting that. My invalidation is back here. So we're still holding the market structure across all time frames, or all relevant time frames at least. And I'm just going to look for a continuation and further breakout upwards into the next resistance. So again, this is nice to see. This is bullish price action. It really didn't start to get interesting until a few days ago. So that's why I'm saying ETH is really starting to look appealing, right? So as you can assume, that probably means Bitcoin dominance is starting to look appealing, right? This is Bitcoin dominance as of a few days. or as of the past few days, only down. Unfortunately, this is down into our major support that we've been discussing for the past month and a half now. So again, I'm going to give you the exact same argument that I've been giving you for Bitcoin dominance. I just made you super optimistic on ETH and how it's going to outperform or BTC, and how ETH BTC looks very bullish and whatever. I'm now going to crush your hopes and dreams by looking at this dominance chart. Dominance is not out of or in the clear yet. Sorry. We've consistently used 4-hour 200s as macro tops and macro bottoms historically, not just recently, historically. Bitcoin dominance tends to respect these moving averages as high time frame tops and bottoms. So the simple argument is we are still back testing the 4-hour 200s as support. If we lose them, we adjust. If they start to curl over, this momentum that we currently have towards the upside, it's starting to kind of go sideways a bit. So you want to see that continue curling over. If it does, probabilities heavily shift in your favor. That probably means that ETH BTC is not only just going up to that 0.07 sats region, but it's probably going to break out above that and head for those weekly supply highs at, I believe, 0.084 or 0.086. I can't remember. Right? So if that happens, probabilities shift heavily. You want to be able to adjust. As of right now, it's still potentially going to be very scary. It's still potentially going to be the same exact outcome that you had at these tests, right? And you could say even this one, you can call that a deviation or whatever. We didn't fall for this. We didn't fall for that move. Go back, watch the live stream. I discussed why uh, this doesn't really do much for me in terms of, oh, I should be bullish altcoins now, and we ended up being right on that. It was the exact same mentality that we said up here. Oh, this doesn't mean that I need to be bearish altcoins just yet. It is, definitely a light bulb that goes off. We need to consider it, whatever, but it's not there just yet. We want to start to see curl over of momentum. It takes a few days to play out. Remember, this trend, and when I say this trend, I mean the 4-hour 200s for Bitcoin dominance. I'm not sure why TradingView isn't loading, but we can say it looks something like this, right? That's my pathetic attempt at trying to draw this trend. So when we're talking about the 4-hour 200s for Bitcoin dominance and how they tend to act as macro tops and macro bottoms, I'm saying macro outlook, meaning multi weeks, maybe even multi months. Remember, we made this argument somewhere around this region in early January when we break down from those 4-hour 200s. We start breaking the structure on dominance. We start breaking down across all time frames. We form this heavy sloped momentum, and we're making this argument about this movement. And that is the same argument that persists for the course of 6 months, right? And so prior to that, the argument was true for, I want to say, 2 months of uptrend, right? And a month of sideways, and a month of uptrend, and a month of sideways. I believe. I might be wrong. Maybe I'm wrong, but I believe that's how it was. I know for sure this was 6 months of only down for dominance. Only down, right? So when I'm discussing this, I'm discussing the probabilities, the outlook for the next few weeks, maybe even the next few months. So right here, when I say I am deathly afraid that dominance is going to go up, I'm talking about the next few months or so potentially. It's been a month and a half since that happened, right? This was June. I want to say it was really like June 14th where we came and said, all right, guys, this is really like the nail in the coffin for me. This is making me very bearish on altcoins outperforming Bitcoin. And that has been true, and that has remained the exact same argument for the next month and a half after that. right? So it's getting around that time where, you know, it's a reasonable amount of time. That trend has persisted for long enough. If we do curl over and die, we need to be able to adjust. We need to be able to say and take that on the chin and throw our ego to the side and stop expecting something that is no longer going to play out because it's already played out, right? So if things change, we need to be able to quickly adjust. Again, it's like that. The title of today's update was, I want to say it was like dancing until the music stops or something. But there's a quote, and I can't remember who says this, but there's a quote that was said, and it goes something along the lines of, I'm probably going to butcher this, but it's something along the lines of dance until the music stops, but just dance a little bit closer to the exit. That's the mentality that I'm approaching this with. I'm going to dance until the music stops. I will be in the party still dancing after the music has already stopped, but I'm going to dance closer to the exit each and every single time, right? As time goes on, I'm going to dance closer to the exit. I'm ready and willing to shift my mentality in a heartbeat if I'm given a reason to do so. But if I'm not given a reason to do so, I'm going to be the one dancing until the music stops. That's the mentality that I'm approaching this with. So when we turn price action back on, you can make the argument that says, truly, even though this is obviously very exciting, altcoins have outperformed Bitcoin massively in the past 2 or 3 days or so, right? ETH BTC broke out and up, right? Reclaimed that range deviation, broke out, expanded away from that, bullish arguments across the board, yada yada, whatever. ETH USD looks very bullish, but we can make the argument still, what is different this time to this time to this time to this time to this time, because we did make that argument, and this time, right? What has changed? And the truth is, nothing's changed as far as dominance. This is still potentially going to be the same outcome, the same result that we've gotten every other time. If it's not, and this time is truly different, we want to stop dancing. We want to stop expecting altcoins to underperform. We want to be the ones exposing ourselves to altcoins and looking at alt BTC pairs at that point, right? Looking for the pullback, looking for the breakout, retest, reclaim, whatever. So if that happens, we will stop dancing. Until then, dance until the music stops and just dance closer to the exit. All right. So hopefully I did a pretty solid job of giving you guys my thoughts on the market, rambling for the past hour. Is there anything that you guys want to see or any questions that you have? Hawkeye, I see that you have a question. When you are scanning the charts looking for a good long trade, is there a single trigger that you use that tells you to dive further onto the next chart or into the chart? For example, if price is above the 4-hour 200s, then you dive deeper, or if price is below the 4-hour 200s, then you move along to the next coin. Or the 1-day MACD has to be crossed up, or okay. I see what you're saying. And you know what? There really is a lot of truth to that. I have a 4-second rule. So I'm not even kidding you. I look at a chart because I'm constantly scanning the market. The way I make my money, the way I, live my life is I trade, right? So when I'm scanning the market, I have a 4-second rule. If it takes me 4 seconds or more to dictate what is my bias on the chart, I don't trade it. I don't trade it. It should take you less than 4 seconds to come to a conclusion. Is this going up or is this going down? That's my rule. So sushi, this looks very bullish. YFI, bullish. EOS, bullish. Litecoin, bullish. Bearish, 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 right? It only takes 4 seconds. That's how long it takes. So, yes, your question, the answer is yes. I do have that like trigger, and it's not really a trigger. It's just a culmination of like I've been using my system for the past 3 years now. I know what I want to see. I know what I'm looking for. I'm looking for higher highs, higher lows. I'm looking for above the 4-hour 200s. I'm looking for a daily market structure that's bullish. I'm looking for a key level that's been reclaimed. I know exactly what I'm looking for. If I don't see that in the first 4 seconds of looking at the chart, there's no point in even diving further into it. I just simply move on to the next coin. It should take you, once you really start to develop your system, it should not take you longer than 4 seconds to come to a conclusion of where are you for that coin. Tezos. Okay, bullish at major resistance. Bullish. Bearish. Sideways. Don't want to trade that. Very, very sideways chop. Maybe potentially going to be bullish consolidation. Bullish. That was Tesla trade. All right, so that's my point. It should take you 4 seconds. Very, very good question. Anything else that you guys want to see from me? Or any other questions? Really good question. I like that. All right, so expanding on that answer. Once I do see like whatever I'm looking for, I know what I'm looking for personally with my system. I know immediately within the first 4 seconds of, do I want to trade this or should I just keep moving? Right? Once I see that, I'll zoom in even further and say, okay, I took that first 4 seconds. I've made my bias. I know what I'm looking for. Now I want to zoom in. Now I need to see, where should I be looking to trade this, right? So, okay, EOS, we're breakout retesting the 4-hour 200s. This looks very bullish. Market structure is up. I'll zoom in. What, test or what support are we finding? Okay, hourly 200s. All right, so maybe I want to get long on the hourly 200s. Let me also acknowledge the fact that we have some 4-hour supply in this region. Right, so I'll mark that out. So now we have 4-hour supply. So now my setups that I can look for are, I can look to buy these hourly 200s, right? And I know that we're flipping a major region, the 4-hour 200s. So I know the trend is shifting. I know that I want to get long on this, and my invalidation is here. Right? You could use this low or this low. I'm just going to use this low for the sake of argument. Right, so my invalidation is below that low and also below the hourly 200 MAs, right? And also losing the 4-hour 200s, which we just reclaimed. And if we never get that, then I know that up is the trend. I know that this is a bullish chart. I know that I want to be in this because I'm expecting it to go up. So I can instead move another setup and look for another way to trade this just higher. So now I'll say, okay, if we reclaim this resistance, we'll probably keep going. My next resistance after that is like this 4-hour supply zone, right about here. All right, so I can use that as a target. 2R trade, that's pretty solid for a 6% scalp. That's pretty solid, right? Probabilities are in my favor. That might be a scalp that I'm more than willing to take if I am here at the chart at my computer when this falls into, or this comes into fruition, right? If we do break out, retest that region, then I might be able to jump in on that trade. So I'll keep that set up there. Let's keep that there. And then we'll say, all right, so we either have breakdown, test our hourly 200s, test the trend, back test our 4-hour 200s, continue the breakout, continue the uptrend. This is my first TP. This is my second TP. If we never get there, we break out, retest. This is my second option. So now this is plan A. This is plan B. And boom, in 30 seconds, you found 2 setups that you could potentially take intraday for an asset. So that's why the first 4 seconds really do set the tone for everything else that comes after that. If you can't figure out what should you be trading or what side should you be on in the first 4 seconds, you're probably not going to do well trading that asset, right? So you move on. Then you zoom in. Once you do find an asset where you can clearly determine the bias of something that you want to trade. So let's say you want to short something, or maybe you want to long something. So you find something that's either bullish or bearish. Once you do find that asset that's trending in whatever direction you're looking to trade, then you zoom into it further. You dissect it. You break it down. Okay, what is the daily structure saying? So you move out to the daily, you'll mark your levels on the daily. I already have my daily levels marked out because I do these live streams all the time. I already know what I'm looking for. All right, so then we zoom in. Okay, now I know that the trend is up. I need to find places where I can look to trade the trend. All right, let me zoom in. I'm using my hourly 200s now. They get nicely respected. Or maybe there's an hourly demand zone that I can look for. You know, things like that. You start to break down the chart and process it, and you're looking for areas to move in agreement with the bias that you already determined in the first 4 seconds of looking at the chart. So that truly is how I scan the market and how I look for setups. These are two setups that I would look to take. And I would have told you this on this test. So this would be almost at TP right now, right? Almost at the take profit or the first take profit, right? So these are actionable ways to approach trading the market. Everything that I'm saying and putting into words can be used actually physically in your day-to-day trading, scanning the market. This is exactly digging into my brain. This is how I use it. All right, I'm glad that helps. Like I said, really good question. All right, guys. Anything else that you guys want from me before I go ahead and get out of here? You've only gone on for an hour. I'm more than willing to stay, hour, hour and a half, 2 hours. Longest live stream we've ever done is like 3 hours, 3.5 hours, I think, which was definitely exhausting. Jacob does them all the time. When he used to do live streams, he would go on for half a day, but I can't. I can't do that. But if you guys want me, if we want to scan the market together, if you want questions, anything, then I'm here. I'm more than willing to be here. If not, then I'll go ahead and get out. Nope. All right. Doesn't seem like anybody has anything for me, and I don't have anything for you guys. So I'm going to go ahead and get out of here. All right. I hope everyone had a nice weekend. I hope you enjoyed the stream. As always, thank you so much for coming out. Really does mean a lot. Hope you learned something. And yeah, I will see you guys on Wednesday. So take it easy, everyone, and I'll see you later.